Chapter 6A of the Income Tax Act, 1961, outlines various deductions from an individual's gross total income to arrive at their taxable income. These deductions are designed to incentivize savings and investments and provide tax relief for certain expenses or conditions. The most common deductions under this chapter are listed below. It is important to remember that these deductions are available only to taxpayers who opt for the old tax regime. They cannot be claimed if a taxpayer chooses the new, simplified tax regime. Section 80C, 80CCC, and 80CCD. This group of sections provides a combined maximum deduction of 1.5 lakh rupees. They are the most popular tax-saving options for most salaried individuals. Section 80C covers a wide range of investments and expenses, including life insurance premiums, contributions to Public Provident Fund, PPF, investments in equity-linked savings schemes, ELSS, principal repayment of a home loan, tuition fees for up to 2 children, contributions to Employee Provident Fund, EPF, Section 80CCC, allows a deduction for contributions made to certain pension funds offered by insurance companies. Section 80CCD 1B provides an additional deduction of up to 50,000 rupees for contributions to the National Pension System, NPS, which is over and above the 1.5 lakh rupees limit. Section 80CCD 2 allows for a deduction on the employer's contribution to the employee's NPS account. The deduction is limited to 10% of the employee's salary, basic plus DNS allowance. For central government employees, this limit is 14%. Section 80D. This section allows for deductions on premiums paid for health insurance policies. The deduction can be claimed for premiums paid for oneself, a spouse, dependent children, and parents. Self, spouse, and dependent children, a deduction of up to 25,000 rupees is allowed. Parents, an additional deduction is available for premiums paid for parents. The limit is 25,000 rupees if the parents are not senior citizens, below 60 years of age, and 50,000 rupees if one or both parents are senior citizens. Medical expenses for senior citizens. If a senior citizen doesn't have a health insurance policy, a deduction of up to 50,000 rupees can be claimed for their medical expenses. Preventive health checkup. A deduction of up to 5,000 rupees is allowed within the overall limit, which can be paid in cash. Other important sections. Section 80E allows a deduction on the interest paid on an education loan taken for higher education of oneself, a spouse, or children. There is no maximum limit on this deduction. Section 80G provides deductions for donations to specific charitable institutions and relief funds. The amount of deduction, 100% or 50%, and whether it has a qualifying limit depends on the fund to which the donation is made. Section 80TTA allows a deduction of up to 10,000 rupees on interest earned from a savings account with a bank, cooperative society, or post office. This is not applicable to senior citizens. Section 80TTB. This is a special section for senior citizens, aged 60 and above. It allows a deduction of up to 50,000 rupees on all types of interest income, including interest from savings accounts, fixed deposits, and recurring deposits. Senior citizens cannot claim a deduction under Section 80TTA. Section 80U. This is for individuals with a disability themselves. It provides a fixed deduction based on the severity of the disability, 75,000 rupees for a person with at least 40% disability, 125,000 rupees for a person with a severe disability, 80% or more.